After trading the stock market for over 30 years, I have found that there's one very important thing that predicts winning stocks. So if you want to find those stocks that can make big moves, whether you're a day trader and looking for trades like this, stock that goes up almost 100% in a single day, or a swing trader where you're looking for stocks like this that go up again about 100% in 4 or 5 days, or even a long-term investor. Here's a stock that went up about 500% in a little over a year. Well, all of these things have something in common, and in this video, I'm going to show you what it is and how to find it. All right, so if we're going to pick winning stocks, we first need to understand why stocks go up in the first place. Now, stock price is based upon the market's perception of what a company can make in the future. And to determine that, investors need information. They need information about what a company is doing, what its growth prospects are, how well is it going to make a profit, not yesterday, but going forward in the future. And so what's really important then is information. Now, the stock market is a bit weird because sometimes some information is really important to investors and other times investors don't really care. And so it's not only about what is the information, but it's also about how investors perceive the information. So if a gold company announces that they found a new deposit of gold and gold is kind of an optimistic market, that stock's going to go up when the market learns about that new gold find. And the same can be said for biotech stocks discovering new drugs or software companies improving their sales with new products. Everything comes down to making money in the future, and information combined with emotion equals perception, and perception is what drives stock price. So if we're going to find stocks that beat the market, we have to realize that the stock market is not fair. Within every company, there are some people that know more about that business than others. There are the large institutional investors, and they have the research capacity, the knowledge to figure out what the information about a company's earnings in the future is. They've got an advantage. If you are an expert in the biotech field, maybe you're a doctor involved in research of cures for cancer, well, you're going to have an advantage over someone like me who knows nothing about biotech or cancer or cures for cancer. And so again, within every industry, within every stock, there are experts, and they can predict what stocks are going to go higher because they have better information, either as a connection to the company that they have or simply because of their expertise. So realize that most of us are at a disadvantage because most of us don't have an information advantage over a large number of companies. But the good news is the people that know the most leave a trail for us to follow. And that brings us to our third point here. Abnormal activity is the key. This is the most important thing that I've learned in, like I said, over 30 years of trading the stock market, that if you can find the stocks that are behaving abnormally, you can find the stocks that have a great potential to do well in the future. Now, it's not that simple, so don't leave just yet because I have to show you some things. I've only given you enough information so far to hurt yourself. So first of all, what do I mean by abnormal activity? Well, in a stock's trading every day, there's two important factors. There's how much is the stock trading, that's the volume. So some stocks might trade 1 million shares a day or 100,000 times a day. And other stocks might only trade 200 times a day for 50,000 shares in total. So how often a stock trades is what we call liquidity, and how abnormal the stock is relative, how abnormal the volume is relative to how much that stock normally trades. So if a stock normally trades 1,000,000 times a day, or sorry, 1,000,000 shares a day, and then all of a sudden one day it's trading 3,000,000 shares, or it normally trades 2,000 times a day, there's 2,000 trades, and then one day it trades 15,000 times, well, that's abnormal. You have to ask yourself, why is the stock trading abnormal volume? Well, it's probably because the people that know the most, that have new information, have found something that excites them. They are buying the stock aggressively because there is some new information that justifies paying a higher price. And that leads us to price, because the other aspect of abnormal trading is price action. If a stock normally moves up or down 1% in a day, and then one day jumps up 10%, it's trading with an abnormal price gain. And we want to pay attention to the gains. Sometimes there's stocks that behave abnormally to the downside as well. If there's bad, negative information coming into the market, then they can drop a lot in price. And we could use that for short selling, but this video is focused on the stocks to buy. So if you find a stock that normally is quietly trading, maybe it trades a few 100,000 shares a day on average, and normally it moves up or down 1% or so, and then one day it jumps up 10% and it trades 5 times its normal volume, that's abnormal activity. And it's these surprises that tend to telegraph when the stock is going to go up. Think about it. You've got the stock that trades around $10 a share, goes sideways for weeks or months, and all of a sudden one day it jumps up, trading a lot of volume. Why? It's because the people that know the most have some new information about the company's ability to make money in the future that justifies paying a higher price. Now, if you were an expert on that stock, if you got that better information, you could predict when that stock is going to move. But here's the reality. Most of us don't get that kind of information. And even if we did, it would be on a small handful of stocks. There's over 10,000 stocks that trade in North America. How are you going to find the few with information that deserve to go higher? It's impossible. You might get lucky once in a while, but generally it is overwhelming to do so. It's okay, because the people that know the most about those companies, within every company, there's a group of people that know more than most of us. When they know something big is coming, they start buying the stock aggressively, and that creates the abnormal activity that I like to follow. So that's the key. But let's take a look at a few charts and see how we can put this into play. Now, if you're a day trader, here's CLVR, which was a stock that was a hot day trader today, the day that I'm doing this video. And you can see this is a 2-day, 2-minute chart. And yesterday was pretty quiet. Today, you can see the volume was coming in and the price action was coming in. The abnormal activity started right at the open at 9:30 Eastern Time when the stock market opened. So that tells me that this is a stock to watch. But I still need to look for an entry signal. And that's where chart pattern reading comes in. This stock made a break from a predictive pattern right here when it broke out from what we call a pennant. Stock goes from $2.20 to $3.80 in about an hour and a half. Great day trader, solely based on this concept of abnormal activity is the key to finding hot stocks. Now, maybe you don't have time to day trade, all right? Maybe you have an hour a day. Then you're going to be a swing trader. Same concept. We look for abnormal activity. Here's a stock that's boring, that's quiet, comes alive with abnormal activity, stronger than normal volume compared to what had come before. That was at a little over 90 cents. This is day 1, day 2, day 3, day 4, day 5. By day 5, the stock had more than doubled. Again, what's key is not to buy here, but to buy here when it just starts being abnormal. Finally, let's look at a longer term investment. This is a stock that started to behave abnormally right there. The Stockscores indicators were strong. The stock surprised the market. It went from boring sideways trading to excitement. This is a weekly chart. You only have to do 5 minutes of work a week to find stocks like this. We have a scanner on Stockscores that you can scan the market for abnormal activity. We have our active live service on Stockscores where we run algorithms all day long looking for abnormal activity on a 2-minute basis. So whether you're a day trader looking at a 2-minute analysis or a long-term investor looking at weekly analysis, the concept is the same. Look for abnormal activity, and then if the chart pattern is right, enjoy the big run higher. All right, now there's another really important thing to understand, and that is this. Almost all stocks that beat the market, that really make these big gains, start their moves with abnormal activity. However, not all abnormal activity leads to market-beating moves. It's not enough to just look for abnormal activity. You also have to know how to read chart patterns. One of the things that I learned a long time ago is that if you can understand 6 things, support, resistance, optimism, pessimism, price volatility, and abnormal activity, those 6 things are all you need to analyze any stock, any commodity, any cryptocurrency, doesn't matter. All it is coming down to those 6 elements that predict chart patterns. So when I was looking at those charts before, I noticed the abnormal activity that started the move as it broke from a predictive chart pattern. And that's what you have to learn. And that's what we're teaching every day at Stockscores. All right, that is hopefully going to help you do better. Simplify it, keep it simple. Go back to the bare basics, look for stocks that are behaving abnormally, learn how to read chart patterns, and if you combine those 2 things, you're going to be able to pick those winners. Hope you've enjoyed this. If so, click on the like button. Let me know of the last hot stock that you bought and why you bought it. I'm curious to hear. Most importantly, trade well.